One thing we've talked about is not just looking at the kind of OG AI names like Nvidia, but to look at the adjacent names, because in some cases that vol is still less expensive and you still get that right tail chase. So, one thing we've been talking about is don't just look at Nvidia, look at the other names like ADI or AMD, Microsoft, others that also have AI conferences going on, because a lot of times you'll see that proxy correlated move, Tom, of the right tail spot up, volatility up, not just for Nvidia, but for that entire space when the enthusiasm starts to bubble.
Tom, Amy Wu Silverman is a graduate of Princeton University, so I'm dying to ask her what her favorite sandwich is at Hoagie Haven, but I'm going to be a professional and not go there. Amy, can you just define for this non-derivatives person what right tail and left tail is?
Sure. Okay, I have to say it's the meatball sub. I just
Nice.
have to put it in there because Princeton reunions are this weekend, so I definitely have Tigers on my mind.
Very good.
But look, right tail is the idea normal distribution of that reach for upside. That's where we see the FOMO and the MOMO. That's where we see the call demand. And the left tail, which unfortunately has been dead for quite a while, is your equity skew. It's that demand for downside protection, which apparently these days nobody seems to want.
Hey, Amy, I'm just looking at Tom forces us on a daily basis to look at the VIX, and it's now below 12, firmly below 12. What does that tell you?
Yeah, I think, we hit sub 12, we're circling 11. I'd say, look, there's two things. One, index volatility has been quite low for some time. There are some artificial reasons why this is happening, and there's just some economic reasons because things look okay, because the breadth of the market still, is very much Mag 7 driven, even if the breadth is doing okay. But look, the rise of 0DTE, the idea that almost 50% of all SPX volume these days is 0-day to expiry trading, look, that does matter, and that is influencing these headline numbers because VIX is just a 30-day weighted average of implied vols across calls and puts.
How do you define exuberance? I mean, financial media people toss around exuberance. We read it from Schiller. We read it from Greenspan. How does Amy Wu Silverman measure exuberance?
I can actually give you the technical definition that we use. It's 25 delta put minus 25 delta call implied vol over at money vol. If that number is inverted, right? If it goes negative, it means that the call implied volatility is outweighing put demand. It's something we actually look at quantitatively on a systematic basis for signals.